a fundamental basis, clearly the story is specific to Tencent, but if we look at it technically, I mean, volatility does create its own contagion if we think about the crowd psychology feedback mechanism. And we're already seeing that if we look at the China tech sector chart, down 20% already, so that's already bear market territory. And even more interesting, if we think about this as potential canary in the coal mine signal, early warning signal for some of the darling buds of FANG stocks in Wall Street. And keep in mind, we've already had Facebook, Netflix already have surprise cliff drop moves as well, but maybe China leading a little bit.
That's interesting, Ron, when you talk about perhaps an early signal. I mean, how long do you think this takes to filter through to the legs of the FANGs?
Well, I mean, from a seasonality perspective, we're already in the negative season for Q3, September, October. This is the time for higher volatility just across the board. The markets which are most overbought and at extremes are the ones that are likely to fall harder, at least have a healthy correction. And that is the tech sector. I mean, it's certainly one of the top candidates for healthy correction. So I think it's something we can see within the next few weeks and certainly the next 2 months based on probabilities for the negative seasonality ahead.
And Ron, I want to get your technical view on the other big story this week, which continues to be around the emerging market space. We've been talking about it with my guest host, Manpreet, here, and a lot of people are trying to wonder, when can you call the end of this contagion risk fear out there? I mean, what are the technical charts showing you?
I mean, the technical charts are showing more of the same. We're getting a continued decline on the likes of Turkish lira and the Argentina currency. Year to date, we can see certainly they're the big outliers on the chart there compared to other EM currencies. But there is a little bit of catch-up that might happen in terms of increased EM volatility, and that is spilling over onto the EM equity market space. So there is likely to be some cross into market vol picking up, and actually as a potential attractive trade opportunity here, it is actually short-dated volatility. If we think about emerging developing markets which are not yet pricing in this increased volatility, so if we think about small cap stocks in the US, and maybe a safe haven place like the dollar or the Japanese yen, this might be a good idea to park money for the meantime.